My name is Dominic Capolongo. I'm the Chief Revenue Officer for LiquidX. LiquidX is a fintech platform that provides operating technology to those in the trade finance space, both asset managers and banks. My prior experience has been in the trade space my entire career. I was a trade lawyer for 14 years, a partner at a firm, and ran that department, and then moved to banking and ran the trade and structured finance divisions at a number of different institutions before moving into fintech in 2016. In the current economy, trade is becoming a much bigger asset class. It's growing by the day, and it's expanding in terms of its reach to more and more parties. Right? It used to be a space dominated by large cap global companies. Now it's available to any number of middle market companies as well. That growth is fueled by a number of different things, but largely the importance of working capital to a corporate entity. And in terms of the banks and everything, and asset managers, they have done this manually, handled the information flow manually. It is getting rather expensive to add headcount. And so there is a push at banks to be more efficient. The technology we provide allows them to scale their business much more effectively without having to add additional headcount. With the recognition of the asset class as really appealing, you've had more and more entities entering the space. So a business that was once dominated by banks now has any number of non-bank financial institutions basically providing capital and participating. Banks that never had an effective trade finance department are now entering, regional banks and smaller banks, for example. It's not just the large global banks. As that has happened, the ability to be nimble and to be able to make decisions quickly has become much, much more important. In the past, basically, businesses ran their operations on spreadsheets. When I ran the business, literally once a month, I would have one of my analysts come in, evaluate, take all the spreadsheets that I'm receiving from different sources and consolidate them manually. That was the only time I could provide a picture to myself, my credit department, my compliance people, my capital management folks as to what I had. And I often made decisions without a clear picture of what my total exposure was to individual names. So as the pressure has come onto banks to be nimble, to be much smarter in their decision making, to know their book really cold on a real-time basis, the need to push to automation in terms of managing the collection of the information and the reporting of it has grown dramatically. I mean, I think that the theme I'm hearing is a much more excitement about the space, and that's been growing over the years. But also with the current situation globally and in the U.S. And generally in each country, there's a sense of uncertainty. So being able to have at your disposal information to make smart decisions becomes that much more important. So tariffs. Basically just regulation, the demands of the market, the competition, spread compression as new competitors come in. All these things they're not going away, and they're getting, they're becoming more important, and they're dominating. So you really need, as a business, to be effective and grow effectively. You really need to have all those things, under control and have the information at your fingertips to make those decisions really quickly.